Hi, everyone, and welcome to the TimingResearch.com crowd forecast news for February 5th, 2024. We are recording this at 1 p.m. Eastern Time, and this is episode number 416. Also, if you have not heard, this week we're going to do starting tomorrow, will be our yearly Tech Wizards conference as part of the Synergy Trader series. So I have almost 30 educators and analysts lined up to share some of their favorite software, indicators, algorithms, apps, tools, and platforms for trading and investing. And so I have three people for the panel today, and all three of them are going to be doing presentations for the Tech Wizards event this week. So, and again, that'll be this week, Tuesday, Wednesday, and Thursday, 10 a.m. Eastern Time until 7 p.m. Eastern Time. So today I arranged for Sonny Harris and Michael Filighera to be with us. And the option professor is back to moderate. So I'm going to go ahead and turn it over to him.
Okay, great. And thank you, David. And we're going to have a great show today because the markets obviously have gone into uncharted territories. And the markets have obviously been on big runs since October. And it is going to be very interesting to hear from our two guests here today because one is Sonny Harris, who has a technical indicators called Sunny Bands. So it'll be very fascinating to see what those Sunny Bands are saying on a bunch of different markets. And then the second guest is Michael Filighera, who is very much an expert in the Elliot wave and the Fibonacci numbers. And when you get into uncharted territories, you sometimes look to whatever you can look to get an idea of where things might be going, because uncharted means you have no idea because it's in areas that has never been. So I think Michael is going to bring a lot to the table there. And then Sunny, obviously, with her Sunny Bands, always brings a lot to the table. So please, get a pen and paper, take some notes here today. I think you'd be smart to do so. Before we get started, Sunny, a little background on yourself and what's going on at Money Mentor.
Thank you, Jim. Well, I'm Money Mentor is always going on. It's free for the most part. There's a few paid things on there. And I have my Sunny Bands on there, of course. I'm a mathematician and a programmer, and I've been trading for 43 years. I do a live trade room every morning if you want to subscribe to that. And if you want to do just one a week on Wednesdays, I do one that's considerably cheaper. And I'll just keep on trading.
Sounds great. And you'll have the Sunny Bands up and running here pretty soon?
Yep.
Okay, good. All right. And over to Michael. Michael, a little background on yourself and what's going on at your company.
Hi, everybody. My name is Michael Filighera, and I am the head cook and bottle washer at logicalsignals.com and tradershelpingtraders.com. And yeah, I know. And currently, I do operate a trade room daily, Monday through Friday, from 6 a.m. to 8 a.m. Pacific Standard Time. And basically, we trade the NASDAQ because it's a very small group and that's everybody's kind of like following along. And that's been my primary market. But I'm in the process of shifting the trade room and putting it on Discord. So I've already set up, or I've had set up for me, servers on Discord. And so I will be putting out a notice when that becomes available. But what it does is it opens the trade room vastly because I've held it to lower numbers due to the fact that right now in its current state, it's open mic. So people can ask questions. It's much more educational. Once we shift and we go to Discord, it'll be much more there in terms of we will be more focused on just the trading and some educational, but more on the trading. So that's what's going on over by me.
Fantastic. Okay, well, we have the S&P here today having a bit of a pullback and using SPX as our guide. I think we ran up to almost, well, I know in the futures, they almost ran up to 5,000. and
Mhm.
and now they've had a little bit of a pullback here today. So I think we always used to do this on Mondays. Let's do it again. Where do we think the S&P may be at the end of the day, at the end of the week? And let's just use where we closed at. Let's call it 49 on the SPX. Let's call it around 49.60. 49.60. Up, down, or sideways, and what's your conviction? We'll start with Sunny.
We're going up.
Okay,
I
so
feel
up by
pretty-
Friday.
I'm never more than 50%, but I think we've
Yeah.
got more like 70% on this one.
Yeah, it looks pretty good. And Michael, what are you thinking?
I actually think that we will end higher on the week as well. And, but I am actually not going to go above 60.
Yeah. Well, like I say, we had a pretty good blow off on Meta with that volume on Friday. 84, 85 million shares, and they ordinarily do 16 million shares.
Right.
Wow.
So you used to trade on the floor, Michael.
Yes, I did.
Let's see if my guess is right on that. When you see 84 million and it used to be 16 million, is that a combination of short covering and people buying back their calls that they shorted, like covered calls, buying them back? And then the guy who places who is hedging, doesn't he buy stock when he has to buy calls?
He actually has buy stock when he's selling the call.
Okay.
So when he's selling the premium, the hedge is that you buy the underlying.
Okay.
So yes, I would say yes to all of the above. And I think today what we're seeing is the side of the crowd is like, okay. We went up $80 on Friday on top of what we claimed on Thursday. So I think I might gonna take some profit here. So I think
Yeah.
what we're seeing is like coming out of the expiration on Friday, combined with a lot of other things, and we cannot discount that. I think the majority, they jumped in because they wanted to get this first time dividend that was announced with the earnings.
Well, what might have also been it on the expiring options.
Mhm.
Some of them were up anywhere between 2,000 and 8,000%.
Right.
And so obviously there was a lot of people playing the game of buying those calls. And so that means the specialist or the trader on the other side, Citadel, whoever they are, would be the seller of those calls. And that would necessitate a lot of buying, correct?
Absolutely. Yes.
So that's really the explanation I was trying to get to, in that there was some hedging by the market makers to go along with short covering and obviously spec buying. And then the combination came up with about 84 million shares. All of that stuff is done. And so is it true that when all the volume has been filled and the prices are that excessively high, that unless the volume comes in anywhere near like that, it's going to fall under its own weight possibly?
I agree with that too. And
Yeah.
we're seeing that today.
Yeah.
We're seeing, and plus just it comes to a point, I would be looking towards C level. So not, I don't mean SEA, I mean C with quotes around it, like the corporate level. I don't know how much time, if there's any, but I would imagine that they're going to start selling their own stock.
Right.
So,
And then, to give you an idea, let's see what the volume is doing today on Meta, just to get an idea. Yeah, 24 million, still higher than the norm of 16 to 20 million, but certainly way
Yeah.
off the 84 number.
and you're seeing that the stock is down 12.5.
Yeah, yeah.
So
That all makes sense to me.
Yes.
And then again, I kind of specialize in the short-term option now. So, I mean, really, if you go into something like Meta's earnings and you want to just throw your hat in the ring, a couple of calls when it's at 406 at the 425 number for cheap money or the 430 number for cheap money. Obviously, that was something that
And you
was
just,
rewarded.
yeah, you
Yeah.
were rewarded handsomely.
And then the other thing is you almost have to trade like a market maker, in that
Mhm.
when you're way up at 485 and it's a heavy volume day, for this week's expiring options, you could throw your hat in the ring, $15 underneath at the 470s, probably get a pretty cheap bite at the apple, and they're already in the money by $8.
Right.
So these short-term options are very risky, to be clear, but the premiums can be very low, which means your loss is only to the premium if you're buying them. And that means you're not putting that much money in. And with the leverage and the potential of volatility, there's a reason why the volume on these short-term options are really off the charts, because, people who don't want to risk a lot out of the pocket, but like to get into a potential of making a lot, it's
Yeah.
right up their alley.
And you're seeing the same thing play out again, even though we have until the 21st before NVIDIA reports. If
Exactly.
you notice NVIDIA, because they've got some upgrades now, we've got everybody going like, oh, the 700 for sure.
Yeah.
And what does the stock do today? It gets to 690.
Yeah. Well, I
the
mean,
options are
obviously,
crazy.
after what happened with Meta, these
Exactly.
people are going to be very much thinking that it's going to be a repeat.
And
But
there's
you know
also that
what?
speculation factor.
Yeah, I mean, it could end up like those crypto stocks where you buy the rumor, sell the fact. Because as soon as
Right.
as soon as they came out with the ETFs, all those stocks like Coinbase,
They
MicroStrategy,
all dropped.
Riot dropped. They collapsed, and
Yeah.
people are left holding the bag, going, "What happened?"
Mhm.
So
Well, the other thing
uh,
that happened is TradeStation closed their cryptocurrency brokerage. They
oh,
decided it's not. So I had crypto through TradeStation, which I had to liquidate before they closed the account. So I
I
did it
get
on
you.
the first day of the notice, and it went down every day after that.
Yeah.
Wow. Yeah.
So that was another feature on why it might have had problems.
Yeah, could have been contributory.
Yeah.
Well, I think we can all say two things, and one is that this market is extremely strong, and that there's not a lot of moving average evidence of it rolling over. In fact, there's none as far as I see. But reversion to the mean is obviously going to be a danger after the earnings season, because after earnings season, maybe the news dries up a little bit. And I saw the seasonality of February and March, and they didn't look
Yeah.
that great. In fact,
No,
I
it
think
doesn't.
one of them had a red number on it as far as the seasonality. So, and then the Fed, I mean, the way the economy is going with jobs and wages and spending on consumer goods, it's kind of hard for them to start cutting rates anytime real soon. So,
Right.
Yeah.
Right.
but are your Sunny Bands up and running yet, or?
Yes, sir.
Oh, good. Let's put them up there and let's start analyzing this stuff, because I'd like to get to all different sectors. The interest rate picture, the oil picture, the tech picture.
Which
Should be
screen
able to
did
share now.
which screen did I? Oh, I see.
Yep, you're up and running.
All right, there we go.
Okay, well, do you want to use SPX as the
Yeah, I
cash
had up in
S&P?
video while you were talking about it.
Oh,
So
okay, yeah.
is it dollar SPX.X?
I don't know. I thought it was just SPX. I don't know what it is on your system.
There we go.
All right, so the Sunny Bands is showing,
49.49.
yeah, 49.49, and obviously gold is above purple, which is a
Both above
positive.
purple.
Yeah.
We have shorter red bars on the histogram, so that's speaking to possibility of going down.
Okay.
The slope indicator, which is a new one of mine, relatively new, is green and has a positive slope to it. And it's positive number. Zero line is way down here.
Mhm.
So that's doing really well.
Mm-hmm.
We have a red bar below the upper outer band, which is a short setup. Now we have to see where the next bar closes. But then the rules say if gold is on top, you only take the trade down to the GMA, because it usually stumbles at the DMA and bounces back up into a long trend like this.
Right. So a break under the green, because I had a number right around that 4,900 too. The break underneath 4,900. Is that where's the second line there? Right underneath the top one. Yeah, where's that one come
Second
in?
one's right there at 49.20.
So if we started bringing 49.20, it might open the door to 75 is where gold is, or where's the gold?
Gold is
48.50.
48.59.
Yeah. So there
So
could
there's
be
not much room from there to there. So I would be reluctant to go short, but I like scalping. I'd probably take a little short in there.
yeah. There could just be a quick one. You know what I mean?
Mm-hmm. Like this
And
one was. See this one before it?
yeah.
Quick, right down to the DMA, bounced. Look how many times over here it goes down to the DMA and bounces.
Mm-hmm.
That's a strong line.
What time frame are we on here?
That's daily.
Okay. So that gives you a little bit of a longer term thing, not just a, or is that daily meaning one day or a daily meaning going back?
Every bar is 1 day.
Okay. So it's a decent amount of time on there.
Yeah. We could go longer.
Yeah, go longer just to give you a perspective of if there was ever a correction, what is out there.
Yeah, well, if there's a correction, what's out here is 47.30 down
Yeah.
to the DMA.
Yeah.
But that's weeks, and 1, 2, 3, 4, 5 weeks if I'm looking out forward.
Well, that would be the end of the first quarter pretty much. So maybe that's not a
Yeah.
bad time frame.
Yeah, it could
Because like I say, the February 21 date could be the crowning achievement for the earnings season.
happen.
And if it's a buy the rumor, sell the fact day, that could light the fuse maybe, huh?
Good.
You know,
Okay.
so you always got to be thinking where the puck's going. The puck has been going straight up. There's no doubt about that.
Yeah.
But like I say, a lot of the things that was bet on to get it up here, which was this moderation in inflation, this lower interest rates, and things along those natures, they're not etched in concrete at this level.
Yeah.
CPI is going to be revised on Friday, and then we've got the actual CPI coming in on the
Next
13th.
week. Yeah.
So I think those are not too bad of a dates to keep an eye on. One is Friday, the other one's next Tuesday.
Is this Friday?
Yeah, this
Yeah.
Friday. I think they're supposed to do a revision of the CPI if there is any, and then a brand new CPI comes in on the 13th.
Well,
And this market is not ready for the CPI to start moving up.
no.
No, they're not.
So, like I say, you can't fight the tape. You don't want to fight the tape. But if your Sunny Bands or any of my moving averages started to give me a rollover, I would be more interested in taking a shot at it from there, because there's a lot of real estate underneath if everyone starts drinking coffee. All right, Michael. Let's go through a couple here, and then I'm going to go over to Michael to hit a couple. Let's put up the U.S. dollar. Can you do anything with the U.S. dollar here?
That's a good one to talk about.
Dollar DXY, I think. Yeah.
Yep.
Well, that's pretty good.
Yeah, it looks like it had its
That's
big
the
correction
weekly.
from 115 down to 100, and it looks like it's going the other way.
Now,
And with our yield advantage, you could probably make a good case that it could remain strong, huh?
yeah, this one is weekly, but you see how purple's on top here. It's
Yeah.
flat. I only expect it to go about that high. So it would either stop here or here. So we've got two situations. One, it could just keep on going up and turn that line gold,
Right.
or just as easily could turn right around and go back down to this level.
So you're saying this is a pretty big juncture for the dollar?
I would.
Yeah. It's either going to be a sell up here and we're going to retest 102, or it's going to say bye-bye to 104, and then 106 will be in the crosshairs.
And see back here, it went up, up, up. It hit the DMA, kind of got scared, and it still went on up,
Yeah.
even with purple on top. So that's
Yeah.
that's a counter example.
Yeah. And of course, right now it is above those two things. So if you wanted to be negative on it, you probably at least want to see weakness underneath the gold, right?
Right. Just exactly.
Yeah, that makes
Give
a
me
lot
a
of
red
sense.
candle that closes below the gold, and then we're short.
What about the price of crude oil? Some of these oil shares have had pretty good corrections, but and people are bullish on it, but they don't seem to be going up very well. So
No. Yeah, so that's well, we've got another one, purple on top, flat DMA.
yeah.
Bar got rejected. I would expect this next bar to also go down.
Mm-hmm.
But oh, that's weekly. Let's look at the daily, see what today's doing. I don't know why it keeps putting this. So today we've got a little reprisal going on where we have a little bounce off the lower inner band.
Uh-huh.
And it'll probably continue to the gold DMA, which is right here, 74.70.
And that means you probably get a little pop in some of the energy shares, which have gotten hit the last few days when the oil dropped down.
Mm-hmm.
And yeah, because but I saw revenues at some of these oil companies really dropped year over year.
Really?
Well, yeah, on their earnings reports, they beat earnings like Exxon and Chevron,
Mhm.
but their revenues seem to drop quite a bit because I guess oil was higher a year ago. I don't know,
Yeah.
and so their
That's what it
revenues would
was.
be higher. Their revenues be higher with oil.
Yeah.
Look at let's look at XOM and see if there's any value to that thing down here because it went down towards about 100 again.
XLM?
XOM, Exxon
No,
Mobil,
XOM.
Exxon Mobil. And we had a question on explaining the different colored
What are
lines. That,
all those lines? Yeah,
yeah. Which do you have any explanation for the
sure.
different colors? Yeah.
The green lines on the outer part of the bands, top and bottom, are the upper outer and lower outer bands. The blue ones in the inside are the upper and lower inner bands. They are 1.2 average two ranges from the DMA. The green lines are 2.0 average two ranges from the DMA. So the DMA is the purple and gold in the center. You can see with purple on top, prices going down, and then gold's on top and prices going up. And now it's very near a flat DMA. And when the DMA is flat, I expect some congestion in this area.
I got you.
Purple and green lines on the bottom. I'm not going to explain that right now. Give me a call if you'd like to. I'll be happy to walk you through it.
Yeah, I think it'd be a good
Yeah.
one-on-one question so you could take
Yeah.
the time. And then if the person doesn't understand it totally, you're right there to talk to them. So call up on that
Absolutely.
one. That's for sure.
Absolutely.
Now, the fact that it held purple and gold is above purple and it's blue, not a negative, right?
That's right.
Yeah, not a
It's a
negative.
negative. It's a positive.
Yeah.
If you pose
All right. So we identified some potential possibly there.
yeah.
Let's take a look at Apple, AAPL on the tech sector that way.
Well, we've got another flat DMA with purple on top with little bitty bars below the histogram 0 line.
Yeah.
So it came down, bounced up. I want the next bar to close above the body of that candle. Didn't do it yet. It didn't close there. So then this candle is the first opportunity to go long.
Yeah.
And I'm not going long with the DMA flat and purple
No.
on top.
I had very good luck with this. Started out the year with puts, and then I switched to calls, and then I switched to puts. So it's only been 30 days to the new year, but I've had 3 outstanding moves in Apple,
Phenomenal.
and those options went through the roof because
Yes,
obviously you got a big move, and I'm
Yes.
dealing in a short-term option. But
That's
now on this
nice
bounce
work.
up here, I'm on the the DNP did not play. I just don't like I said, I don't think it's the same kind of a deal, that it was last time it was low and turning up.
Mm-hmm.
Last time it was low and turning up, I had a little more confidence in it. This time I'm like you say, you got purple standing right there, and
Mm-hmm.
they did announce things that weren't the greatest.
Oh,
Right.
did they?
Yeah.
Yeah, they
Well,
did.
they're just not growing very much, and China's a real whack in the back of the head to them, and they came out with that $3,500 who knows what it is on your face, and I don't know that that's gone over very big.
Oh, the 3D glasses things, the
Yeah.
virtual reality.
Yeah.
Virtual reality, yes.
I'm not gonna
So,
wear them.
well, I already look silly, so if I put that on, I'm double silly. Anyway, no, it's probably a great product. I'm just not into it. Okay, so that's Apple, and then what else could we look at here? How about the SMH as a basket to the semis? rather than playing pin the tail on the semi. Because some of these stocks, are doing great, but some of them seem to be stalled a little bit. So this might be a neighborhood of resistance against the green.
Yep.
And look at this. Let me put a horizontal line, which I call an attractor, right there. So that's a stumbling place. That's a technical analysis term, stumbling.
Mm-hmm.
If it consolidates right through here and then goes on higher, that's what I think is the more likely. But it has to get above the high of, or the body, sorry, of this red candle.
Yeah,
So
because clearly this is a sector that obviously standing in front of it has been suicidal, but everybody has pullbacks at some point. And like I say, after the February 21 timeframe, if it turns into a buy the rumor, sell the fact type thing, there could be a lot of potential on the sell side or put side of some of these things, huh?
Yeah.
But
good, but I, like you said, never try to catch a,
yeah,
it doesn't work to
Overnight.
say falling knife. So
or step in front of a freight train in this case.
there you go.
How about gold? That seems to be really stuck between 2000 and 2080.
It's
Rock in a
stuck at
hard place, Jim.
2000. It's just stuck there.
Yeah.
What
You
was
got two bands there and it can't get out of the band.
No, it sure can't. That's a definite channel, isn't it?
Yeah, oh, definitely.
Top to bottom.
Yep. And it's got the red going now.
It
So,
has some
the
more
risk
room
now
on
is
the
it
bottom.
blows out to 2020. It blows out to
Exactly.
2005 and goes into the abyss a bit.
Yeah.
It does.
And that's what I kind of think's going to happen.
Yeah. Well, because again, the interest rate is well above the inflation rate and they're holding it there. And that's like taking the oxygen out of gold.
Yeah.
So something's got to give there. Either we got to get the inflation popping back up or the interest rate's got to come down. I do notice that the M2 money supply growth versus inflation is rising. So I find that to be something that if it like it used to be minus 5% money supply growth, which was actually a historic low coming off of a 27% increase in the money supply back in
Oh my.
2021.
Wow.
So what a dramatic drop in the money supply. But now, just like 27% turned down and went all the way down into negative,
Yeah.
minus negative has turned up and the inflation rate is above zero. So if they were going to meet, there's a little bit of printing to be done. And if they're going to do that, that helps asset prices, I think, including gold. So I'd keep an eye on that money supply growth because generally speaking, when that is rising, the gold and oil and stuff like that do pretty well.
They do, but Jim, we have to consider that the dollar's above 104.
Well,
And
that's a factor.
that knocked us down. That killed the rally.
Yeah, of course. And that yield advantage, that's the whole thing.
Right.
So the gold, a little dodgy. We got the dollar on a ledge, but looks like it could be good. We got the oil having a little pop. The semis are into some resistance. So by the 21st, we'll have a good idea if this thing's going to hold or not. And the S&P still looks pretty good. Really just having a pullback here today. Nothing to write home about, right?
Right.
Well, when you get in uncharted territories, that's when I like to go to my bullpen and bring in my best pitcher. And my best pitcher on this is Michael Filighera. So Michael, share your chart and let's find out what Elliott wave and Fibonacci is saying. And I want to, while we do that, I'll ask you a quick question. Sure. A lot of times with the Elliott wave, they were looking for the peak of 2021 to be the top of the fifth wave and then counting down 3. But they said there is a situation where if we go up into this kind of neighborhood, that the move down in October might have just been the 3 move. In other words, the 2 move was up to 4,800 back in 2021. Yeah. The two move was back to 3,500 in 22.
And this is only wave 3. Yeah.
And this is a wave 3 where we could go into ad infinitum. So if and obviously that's the beauty of people who do technical analysis is that, you do have to be flexible enough to know that you may have to change your count because obviously the market's changed.
True.
So
I'm
I
gonna
just wanted to
present
see if you
something
are you feeling this is still like, because again, one guy was saying that this big sharp rally that we just saw is
Yeah.
a classic bear market trap. And so I was just trying to get an idea. Do you, because everyone's now talking 5,000, a lady going 5,500 by the end of the year. So, I mean, the bulls are running like Pamplona right now.
Well, a couple of things I think that, but I'm glad that you're bringing that up. I would present a totally different picture rather than it's a third wave and it's just, just going to keep rising, rising, rising. I think that there's two things I believe right now on an Elliott basis that I still believe that at the January 2022 highs, that was the completion point for a cycle degree third wave, which is what I have it marked as. So if we're in a cycle degree fourth wave, then it's going to consist of an primary degree A, a primary B, and a primary C. Now, granted, saying that it's corrective, but we've already gone to a new high, Michael. What's going on? Well, part of what Elliot did talk about and detailed through his own observations and his own analysis is that when we're in a corrective phase, that he came up with what we now term as an irregular B wave. And what that really entails is that the high or the low, depending on the direction that this B wave takes place, will go to either a new low or a new high. In this case, it was a new high. When that occurs, there are Fibonacci numbers or levels that come into play. And when we hit October of 2022, which was a major low, which was the bottom for primary wave A, I
Right.
discussed it back then. And so what I find is like, well, a year's gone by, so a lot of people don't remember a conversation from 2022 when I laid out we're going to go into a B wave. And not that I'm looking for it right off the bat, folks, but a B wave could go irregular, and that would suggest that we go up and make a new high.
Okay.
So,
No, hey, listen, I'm not an expert at this, but I'm getting it. And let me just put it into silly terms for guys like me. We had the 5 waves up, and now we are counting the 3 waves down. But the A wave was obviously 3,500, but the B wave, there are explanations on why it could be a higher high and still be a B wave.
absolutely.
Okay. And that's something I didn't understand. And I'm sure many people listening don't
Yeah,
understand.
it still could be corrective. In fact, now I'm going to toss in something that's non-Elliott, non-Fibonacci, but something that's actually very, very
Oh, no.
important. That we have the leading economic indicators. We get it's a group of 10 different indicators and 10 different numbers that get grouped together, and we get the leading economic indicator graphed. Well, as it did, it went down following right here. So when we bottomed, everything was lining up. Then together they started to rise, which gave us that a little bit of a boost that we saw, and everybody coming back in and buying, and everybody starting to change the narrative, et cetera, et cetera. Then we declined accordingly because the leading indicators led us back down as the talk of recession started to come in. Well, suddenly that narrative changed. But guess what didn't change? The leading indicators. So here goes
Absolutely.
the S&P skirting up to new all-time highs,
Right.
while the leading indicators are continuing to decline. So
Right.
what does that tell me? Well, I'm going to put my faith more in the leading indicators rather than a group of stocks that are totally being put into
All
play.
right, let me just jump in here so people get it. This rally we've seen. Okay, if you look at the S&P equal weight, it ain't happening. If you
Right,
look at the
exactly,
small
correct.
cap, if you look at the small caps, it ain't happening. They
Correct.
created 2 indexes, the S&P and the Nasdaq, of which 30% of the S&P is these 7 stocks, and on the Nasdaq it's 50%.
You're right.
And so that can pretty much dilute what you're looking at. And if in fact either AI is way ahead of its skis, or basically anything else has been, and the valuations have gotten extremely excessive again, then this rally would be on borrowed time. And in truth, no one's looking for that.
Right. Right. No one's looking for that. Now the thing is, it's like, don't get me wrong. I'm not saying that this market is going to turn the end of today.
No,
It's
no.
not. And as I showed you, even in the beginning when you asked me, I said, no, I still think we have higher ground to go. But
Right.
this is a weekly chart. So here I have my fibs. Now you talked about 5,500. Well, that's the fib they're using. 1.618 on this rise. That is
And
where this,
what's that number?
it's actually 5615, but a lot of people are sticking with 5,500. So I guess it depends on exactly where you place it.
Right, where you measure from.
So, but so it's in the hood, as I call it. And actually the other one at 5,500 could also fit within what the current position that we're going up in. So let me kind of bring this down real
What
quick.
about a
So,
0.38? Where does that land you?
5307 to be exact. So I want to bring this down real
Oh
quick
my
and just
God.
stick it in a 4-hour chart, because as within this intermediate degree C wave, right, as a part of that larger primary B, we're now in a C wave rally. It consists of 5 waves of minor degree. So there we got the 5 waves going again. And there's minor 1, 2, 3, and 4. We're in the 5th wave. So fibs that I can automatically put into play here is like, if I'm convinced that that's the bottom for the 4th wave, which I was, then the fib that goes with it is that the 5th wave is compared to the 1st wave. But it's a minor degree, so I got to go, here's the minor 5. What am I going to compare to it? Minor wave 1. So I draw my fibs over there, and now I've got estimations. Well, it's already surpassed 0.618. In fact, I need to just remove it because now it has no meaning. We've
There's no
exceeded.
validity. No validity.
Right, it has no validity because it's been exceeded. So I take it off. What do I got next? Well, that was 5,001. Now I've left it up because on was it Friday?
Yeah, it was like 49.95,
It
wasn't
was
it?
49.98.
Okay.
I was
And
just, it wasn't
your number
yesterday, it
came in at
wasn't
what?
Friday, but it was
5,000?
Friday.
What's your number at? 5?
49.88.
Right.
So as I say, and it's close enough for government work to 5,001.
Yeah.
And then I have another for the minor 5th wave, and it's 100, so equality. So when you're dealing with Fibonacci, particularly with a 5th wave, equality is the most common. 5 will equal 1. Well, that on a minor degree came in at 49.92. Oh, it got to 49.98. Wow, exceeded it by a little bit. So in essence, between the two, the minute and the minor, it kind of came right smack dab in the middle of it. Now it starts to pull back. But guess what? In here, I can basically say, now I'm going to bring this all the way down and put it on an hourly so that we can see. Now we just got all this internal, right? 1, 2, 3, 4, 5. Beautiful 5th wave. Reached resistance, not just once, but twice for the minor 5th and the minute 5th. I could have put a 5 there, called this all over. But then you very astutely said, Jim, if we go and we look at the NASDAQ versus the S&P, in the S&P, 30% of it is high tech. It's Mag 7. In the NASDAQ, it's 50%. So when I go over and look at the NASDAQ has not made a new high over its 3rd wave, whereas the S&P's done it twice. So what does that tell me? Very, very strongly that we may be in an extended 5th, and it could be an extended 5th within the 5th, or just is going to be labeled as minuet wave 1 of minute wave 5. And if that's the case, now you begin to see where we could end up. Now add into this, because you're an options trader,
Absolutely.
we got a gamma wall. We've got a call wall. And I'm waiting to hear from Spot Gamma as to exactly where that might be. Last week, it was like between 460 and 5,000. This is all SPX.
Okay.
So when you add the premium for the futures market, it really placed it about 516 to 530. 5,030 to 5,084, right in there. Now, that premium is going to keep getting lower because this is a March contract. So day by day, so we start getting down towards the end of February, we're going to have less premium in there, and that call wall may change. Now, having said that, if it breaks the call wall, the gamma comes into play, and I'm going to let you explain gamma in a running market. But what happens is I have to go to my next levels. So how I work it is I still have, this is the primary B. That's a resistance for the primary B. These are resistance for the minute fifth. These are resistance for the minor fifth. And you'll see how they start to line up. Like here would be a good lineup. 1.618, 5116. That's a good lineup on the primary and then on the minute. And how does it work for the minor? Well, the minor fits in because once it gets above the 100%, it's all just gravy from there because it comes down to the structure. The structure. So because minor 5 will be complete once minute 5 is complete. This is in play, but I could call it and done there. We're still on the hook with it. I don't know. But my guess is that we have more to go.
Yeah.
Why? Because the NASDAQ has not reached that new high yet. And 30% of the Mag 7, via the Mag 7, sits in the S&P.
Right.
So that's why I've got that going.
So if the NASDAQ is going to go up, it's going to be because of those 50% of the stocks. And those
Yes.
are heavy into SPX.
Yes.
So the likelihood it'll give you a boost through that 5,000 number is pretty high.
Yes. Now the thing that kind of
Now, could there be a divergence in that the NASDAQ never makes a new high?
Oh, then we'd have a failure, and I would be like, get out of the way.
Yeah.
Get out of the way.
But that would
whatever
be
downside
the
shows up.
S&P breaking under 4,900 and 4,850 to get started.
Yes, correct.
Yeah.
Correct.
And believe me, you don't need to be the first guy on either side of the market to do well. You just want to make sure there's people besides you believing it. And obviously, if
You
we
just
go
want to
from
make sure that you're not trying to lead the charge. That
exactly,
somebody else
exactly. And
somebody
so if
else
we
is
went from
going.
5,000 underneath 4,850 and 4,900, that means there'd be somebody behind you as well.
Exactly.
Yeah, just like when we were down at 41, 4,200, you didn't have to buy there. Even if you waited to 43, 4,400, you'd
Oh,
have
you
the
made
right.
a
You've had the
bundle.
ride of your life.
Yeah, you made a bundle.
Yeah.
And
It's going to be the
again,
same thing. Yeah.
yeah, and it really can be. And I just think that when we look at the market internals, I mean, just even here on an hourly, I mean, let me just go up back to my daily. And we start to look at, like, this high was here. This high was 48.25. Then we made, look at that, the new all-time high. We didn't even outdo the previous high. This is the relative strength of the market. So when you
Now,
start
I have a
tracking,
quick question that might be helpful to people. Say you believe, as a given, that the end of February and into March could be corrective simply because of a number of things, including the seasonality of those months.
and we have some
And
cycles coming in towards
yeah,
they're
so
going to be
say
putting a
that's
lot
your
of
given.
downside pressure. But
How
yes,
high would you think that it's possible to go between now and the next few weeks? Your first area was the ones we hit already, which was 5,000,
right.
and
So next up is 50.84 to 51.16.
okay,
Plus or minus a little bit on the other side. Then
right.
51.71 to 52.19. Plus or minus a little bit. And actually you can go, and then you got 53.07, which is kind of out there all by itself.
Yeah, to be honest with you, if I was a guessing man, which I guess I do for a living, it seems to me that we've used some gasoline to get up here.
Yes, sir.
And that if there is going to be a rollover, I wouldn't think there's more than a couple hundred S&P points left in there. And then these other numbers we're talking about, that could happen as we go into the end of the year after
then it's
September.
a whole different wave pattern.
Yeah.
It's a whole different wave pattern if we're talking the end of the year than what is now.
I see. So what you're saying that are you saying that the probabilities or the possibilities are strongest that we'd even go to these 5,300 numbers more immediately? Because if they call the dogs off in March and we went down, let's say to 40 whatever 100, say we lost 150
if we go down to finish this C wave and that larger cycle wave 4,
Yeah.
We're just really going back to 3,500.
No, but if we pulled back, let's say from the 5,000, 5,100 area, 5,200 area, and we pulled back to your 4,700 number there, are you saying that the party would be over up there, or is it possible closer to the end of the year or whatever that there'd
No,
be another big
I
rally to
would
take?
really start to think that the party was over if it
I
started to
got you.
break below 4,700.
Because this
And
fever is hot
again,
now, and the fever's got to stay hot, or once a fever
well,
goes, it'll be for a reason.
but yeah, but I think if we really start to read the writing on the wall, and you make good mention of it, when we're starting to really base our analysis and our movement on 7 stocks,
Oh
and
no,
now
believe me, I believe me that's the big risk. Because believe me,
well, we got one left.
if the words AI get out, that it's not going to be profitable, it's not going to be generative, it's not going to be,
Well,
in other words, if we're way ahead of the skis, as we were with crypto, as we were with electric vehicles,
amen,
as
amen.
we were in
Yes,
2000 with
yes,
the internet to begin with,
yes.
if we and believe me, if you've been in it decades like we have, there is a smell of that out there.
Yes, exactly
Yeah.
correct. It doesn't mean that AI is bad. It doesn't mean that
No,
AI will
no,
not come into fruition.
no.
What it means is you guys got way ahead of the train.
Yeah. Well,
You
IBM,
know?
I mean, what do you call Microsoft saying that on the investments they've made into it, they haven't got that money back.
No, but they will.
Well, they say they will, but it's not priced as they will. It's priced as they are.
Right. They
It's
will.
like you could have paid LeBron 50 million when he was in 8th grade because he was going to be great, but they're not going to pay him in 8th grade 50 million.
But he was still scrawny and skinny.
That would have been overpaying for LeBron at that age, though. You know what I mean?
Right, right. So I mean, I do feel that what I find very interesting is it's like people just like, well, they suddenly have fear that the market's going to decline. And it's like I can get partially why you would have the fear, but nothing in our life goes straight up or straight down. We ebb and we flow.
Yeah.
That's just the nature of the market.
Well, and
Now,
that's why this move in the last 90 days is a bit odd.
well, absolutely. Now I'm going to make it even stranger if you're ready to go over there. And can we talk about the bonds?
Oh yeah. Again, I wanted to hit the VIX too before we leave, so we got about 10 minutes.
Okay. So I'm going to put up the 30-year bond, which
Yeah,
is
because the whole
actually,
planet thinks that the rates are definitely going to be cut, and if these numbers turn on inflation, the cutting thing is just going to be a saying, "Hey, we told you we were data dependent."
right. Now, because I talk with people on credit desks and everything, their friends and other traders. So it's kind of like they started as they did, this is a daily chart. Let me go down to the 4-hour, we'll see it a little bit more clearly. I mean, we had this incredible rally right there. Get out of the way, get out of the way. And
Yeah.
everybody's storming in. And then the very next day after the Fed, oh my God, get out of the way. So I called my friends. I said, what is going on? It's like, well, recession risk off trade. And what that essentially means is that they no longer believe that the recession is going to happen. So, they're taking that risk off.
Mm-hmm.
And if in terms of the 30-year bond, they're looking to lock in a 4% or thereabouts, right? So as a money manager or whatever, it's like, well, if I can lock that in, then I should be okay because I'm going to get a 4% coupon, blah, blah. Now, then the very next day, when the Fed kind of came out and said, well, no, not sure we're going to start cutting. We can't give you any numbers. And we're still looking at this. And then they hinted at those leading indicators. And then suddenly what happens? The 30-year bond is down over 2 on Friday. And I'm looking at that going, okay, what is this? Recession risk on trade being put back into place? So we think we're getting crazy in the equities markets. It is spreading. It is spreading.
Well, I mean, the debt markets are actually a joke because they're selling junk bonds for a fraction a bit more than you get in treasuries. So
Yeah.
I mean, the spreads between treasuries and junk are ridiculously tight. You would think that you're buying money market with these junk bonds, but the way they're giving out the differential there
Well,
spreads.
what they actually started to do as well, Jim, is they started to the curve started to invert again, but
Yeah.
invert back. So in other words, short end versus long. So long end was starting to decline, with short end beginning to, do what it should do. So it started to decrease or start to shrink the curve.
Yeah, my
between
key number on the 10-year is around 420. You start seeing a 430 or 440 print on the 10-year, then you're going to get a big rake on all those. The Fed's going to cut soon off the table. Because everyone, I mean, a lot of very smart people say it's going to be May or June. And, I think a reasonable thing could be quarterly cuts June, September, and December.
Yeah.
But, if those CPI numbers start going the other way, and labor is going the other way, and one of the things was they normalized the supply chains, so goods prices, the Home Depot stuff, the refrigerators, all this stuff, that all came down,
Yeah.
but they're not going down anymore
No.
because
What
these
was your number on
consumers
the
out there
10-year?
buying stuff.
On the rate in your tenure, what was your number?
Well, I think 420 is a big number. It starts going 430, 440. I think that's going to get people, a little bit nervous, and that
You
could
almost got
also be
415
negative for the stock
today.
market at that point.
You almost got up to 415 today.
That's what I'm saying. We're in a neighborhood where it's either a very good time to start buying some more bonds, or you're going to have to change your tune, because I don't think 430, 440
There you
is.
go. So, folks,
is,
it's I think as we're talking, what becomes fascinating
Yeah.
is you see how many different sides are coming in, and we're meeting, and basically, what is our message? We're kind of in disarray. We're kind of very confused. The markets really don't know where they want to be or how they want to get there. And we have too many danger signals all kind of coming in. So how do you want to trade that? Well, I would say carefully.
Yeah.
But,
Well, I would
forgive me,
say
Jim,
if
but
you're on the
Jim,
if
I'm
you're
gonna
long
make a little
if you're on the
plug.
long side, you want it on a little bit of a short leash,
Well,
and if you're trying to do it from the sell side, you're probably a little early.
you're probably a little early, and that's why I was going to say you want to go talk to a person like Jim,
Yeah.
who's helping guide you at least option wise.
Let's throw the VIX up there, because I think the VIX bottomed at 1250, and if the VIX bottomed at 1250, and we have hit that 5,000 number, I'd keep an eye on it here. So,
Look at the mess. Look at the mess it's making.
yeah.
This is a 4-hour chart. What do you want?
And how far out back are you going? Just going to go? Yeah.
Oh, I go back to, I got March of 22. I can go further.
Yeah, no, that gives you an idea that we're in the lower echelon down here.
Very much, and just scraping along the bottom here, and still not deciding what really
And
needs to happen. But can I show you one that I think has kind of, like, this is just the CBOE, right? So it's more of for the old OEX, right?
exactly.
So, but how about this one? Talk about volatility. Look at that mess. This is the NASDAQ 100 volatility. These look at these moves.
Are those wicks or bad trades or what? Or
They
you
are
marking
the
trades?
true wicks.
Oh my gosh.
Yeah.
This is the craziness that this index produces. So what's right and what's wrong? Who knows? Look at the wicks in here.
Mm.
Look at those wicks.
Mm-hmm.
But that 12 to 14 range on the VIX is not generally well, it can stay there, and we could just keep rallying and rallying and rallying.
Yeah.
But if there were to be a danger zone, and if it was going to blast out of a neighborhood, that's the neighborhood it would turn out of. And like I
Right.
say, I had some divergences in the stuff that I had down at the 1240 area when it hit that low. And
Right.
so I thought, I thought there would be a little correction. There was at least a little bit of one.
But you can see that they're all 3, 3, 3, 3, 3, 3, 3. So either this is like a very strange finishing triangle, and the next move would be down. Sad to say, but
Yeah, well, if you are going to go and break 5,000 and go into that higher neighborhood, it is going to break down.
you're right. There you go.
So, I mean, you can really follow the VIX. And basically, if you see it breaking out the top and you can see it breaking under 4,900, you might say that the bear bus has arrived.
Yeah.
And,
but folks,
and-
the other thing to
yeah.
remember is that even if we're going to go up above 5,000, it's not like we're breaking out. It's not like we're just going to keep on going. In my vision, in my view, it continues to be a finishing move.
Yeah.
So,
Yeah. All right. Well, we're at the top of the hour here. Sonny, tell everybody how they can get a hold of you. And if you have any special offers, it's a good time to extend it.
Well, I do have a special offer going on right now where you can buy a year of my live trading room and Sunny Bands together for a discounted price. That's on moneymentor.com. And let's see, I'm a veteran trader, 43 years. I'm a mathematician and a programmer. And so I know how to write the code that you tell me you want because I understand technical analysis. So give me a call. There's my number right there. I like to talk to people.
Sure.
I like it. I like it when new traders especially call me.
All right. Sounds great. And Michael, how to get a hold of you and any special extended offers?
Again, if you want to get a hold of me, and you can do it directly via email. I'm not as gracious to give out my telephone number because it just gets weird. But you can contact me, Michael at mjf1partners.com. And I do a daily update on the S&P and the NASDAQ and the futures markets on YouTube. And my YouTube channels are under my other site, which is Traders Helping Traders. So if you go to YouTube and you look in Traders Helping Traders, please go to my name, Michael Filighera, because there's somebody else who's actually taken that Traders Helping Traders. And YouTube's like, yeah, well, okay, no problem, even though we own it. So that's the way that goes. So that's, I do daily, and then I do a weekend big picture technical update, which is also posted on my channels on YouTube.
Okay, perfect. As far as Option Professor is concerned, I've got a situation where I have a link to the indicators I use and also a 1-hour online meeting explaining my views on trading and strategies and everything like that. As far as options are concerned, I've been doing it for decades, and I've traded thousands and thousands of them. So I think for most people, I could probably help you educate yourself further. I'm specializing a lot in the short-term options now, simply because that's where all the volume is. And if you're going to do short-term options, your one of your most important things is timing. And that's my timing indicators can be very helpful with that, because obviously if your timing is wrong, it can be very painful with the short-term options, because there's not a lot of wiggle room because of the time aspect of it. So if you'd like to talk and have me explain how I might be able to help you, it's optionprofessor.com, OPTION professor.com, or shoot an email to optionprofessor@gmail.com. And I'll explain what I could do for you. And there's no annual fees or anything like that. So it's a very, very reasonable situation. I think you'd be very happy. Okay, guys, thanks a lot. I think we gave a lot of good information out here that people can use. And thank you very much, Sonny and Michael, for being here. I knew it was going to be a great thing. So yeah, you bet. And we'll see how things unfold. But now I'm going to send it back to David.
All right, great. Yeah, tons of good info today. So just a quick reminder for everyone, be sure to subscribe to Timing Research on YouTube and your favorite podcast app. Or you can just go straight to TimingResearch.com to get access to any of the past shows and events. And just another reminder that we are doing the
11 o'clock a.m.
So it must be time to go.
Yeah. We are doing the Tech Wizards event starting at 10 a.m. Eastern time tomorrow. And Sonny, Michael, and the Option Professor will all be doing presentations on that event. So we're going to cover some of the best indicators and software and platforms available today for traders and investors. So again, that's Tuesday, Wednesday, and Thursday, February 6th, 7th, and 8th. Sure, yeah.
So Thursday, I'm speaking, and I'm going to, of course, I talk about Sunny Bands because that's all I use. But I'm also going to talk about my Ultimate F compounding spreadsheet, which I haven't introduced to the public before.
Okay, great.
Thank you.
Well, yeah, looking forward to that. So, yeah, but just looking at the schedule here. So Sunny will be on at 4 p.m. Eastern time on Thursday, February 8th. And Michael will be on at 1 p.m. Eastern time on Thursday, the 8th. And let's see, I think Jim is
11
to
a.m.
be
Eastern.
on Thursday as well. So
Yeah.
that's funny.
All the good people on Thursday.
Yeah.
There you
Exactly.
go.
And that's turnaround day too.
Yeah.
Oh,
So, but yeah, we have a good full schedule for all 3 days lined up. So yeah, be sure to join us for that. And if you can't make it to the live event, those recordings will be on Timing Research as well as soon as I can get them posted each day. So, all right. So that's it for today. Just want to thank my guests again for today. Sunny Harris of MoneyMentor.com, Michael Filighera of LogicalSignals.com and TradersHelpingTraders.com, and the Option Professor of OptionProfessor.com. Thanks, everyone.
thank you, David.
Thanks.